Welcome back to another trade breakdown on AUDCHF, a long setup that I took based on structure, premium versus discount, supply and demand, liquidity, order flow, and the 3 condition POI. This one I never ever mentioned before in any other video, so if you want to know what it is, make sure to stick until point 6 to know what the magic was behind this actual trade. So my name is Oscar Madsen. I'm a funded trader as well as a personal trading coach inside the Trading Academy, and with these videos I'm trying to teach you guys all of the technicals you need to know in order to become a technical and profitable trader. Okay, so let's do structure first, then premium versus discount, supply and demand, liquidity, order flow, and the 3 condition POI. So if we take a look at the structure here on the weekly, we are clearly bearish. Then going over to the daily, this is the same structure in my opinion, so for me the daily is also bearish. Looking at the 4 hour, we were bullish over here. So that's really quick, the structure on all time frames. So what do I know? Weekly and daily are bearish, but the 4 hour is bullish. Now we know 4 hours is our main time frame, so now we can take a look if we can take a long setup or a short setup based on the other confluences. Going over to premium versus discount here, what do we see? Well, we can see that we didn't yet tap the premium prices. So we are bearish, but we could still trade up higher in towards the premium prices. Going over to the daily, that's going to be exactly the same. Why? Because this is my swing, and then this is going to be my premium prices where I want to trade towards. Going over to the 4 hour, we know we have kind of a different premium versus discount. What do we see? We are bullish from the swing low in towards this swing high. These are our discount prices, and from here we are looking to reverse up higher. So what do I know? Well, I can see that on the weekly and the daily we could still push up a little bit higher in towards premium prices, which I'm also going to make visible on the 4 hour, because if we take a look at the 4 hour, we then can see that from these discount prices, because we are bullish, we can trade towards that blue line, which is the PVD or the premium prices on the weekly and daily time frame. So looking good for a long setup. Then we're going to take a look at supply and demand. So over here we have never ever traded before on this kind of like price action, so we do not have any demand on AUDCHF on the weekly time frame. So then what do we have? Well, we do have some supply right over here on this buy before the sell, so we could definitely trade up higher in towards that supply and from there trade down lower. Then going over to the daily, well, what do we see? We also do not have any demand over here, and also not over here as we have seen on the weekly time frame. So where do we want to trade towards? Well, I can see we have an open supply zone over here, which I'm definitely looking to trade towards, maybe soon or later, and then from there either drop or whatever, trade up higher. But I'm definitely expecting some upside until those weekly and daily supplies. Looking at the 4 hour then, well, what do we see? Over here we can see that we had this little demand zone. Why? Well, first of all, the demand actually started from here. We had demand, and you can see we had demand every single time. So then this demand was in control, pushed price up higher. Once we broke this high, which demand was in control? This demand. Well, this is the sell before the buy. You can see we've already traded inside this demand, but still this demand is still valid to push price up higher. So we do not really have an open demand zone in this case, but what do we have? We do have some sort of demand because we keep on getting sells before the buys, which are overall demand zones. So yes, we also have a demand zone on the 4 hour to push price back up higher in towards those higher time frame supplies. So now that we have structure checked off, premium versus discount checked off, and we also have supply and demand, which looks great to trade up higher, now we need to take a look at liquidity. So going over to the weekly time frame, what do we see? Well, again, we took some liquidity over here. So this was the lowest point AUDCHF has ever traded towards, and now we swiped the lowest point ever. We took liquidity under that low, swiping their stop losses, and now we could see a reaction up higher. So on the weekly time frame, really looks clean to trade up higher. On the daily, there's no other liquidity, so it's going to be the same liquidity as we saw on the weekly. And then what can we say also about liquidity? Well, that there is some liquidity to take out above the highs. Why? We have an open supply with trendline liquidity, which we expect to take out in one move. Definitely looking nice to trade up higher based on the weekly liquidity that we took and the daily liquidity that's open to take out. So let's now take a look at the 4 hour. So what can we see on the 4 hour? Well, we grabbed some liquidity under this low, then we were trading up higher, we swiped again a little bit more liquidity under these and these lows, and this boomed price back up higher. Then we got a retracement, took some liquidity over here, then got a reaction, and then we traded down lower, broke this low, so also took liquidity under this low, and then we also boomed up higher. Then what happened? After breaking structure, we created some liquidity under the lows, which we then took out, and boom, now we are expecting more reaction to the upside. So we definitely have liquidity which we take out every single time under the lows in order to fuel the next move back up higher, right? So liquidity here is also checked off of the checklist. So now we already have structure, premium versus discount, supply and amount, and now we also have liquidity. Now let's take a look at order flow in order to trade up higher. So on the weekly time frame, we do not have any bullish order flow, but we miss order flow with the bearish order flow. So what can we see? Every little supply zone connects to each other, but we still need to connect with it in order to trade down lower. So still valid to trade up higher in towards that order flow or supply zone in order to continue the order flow down lower. Going over to the daily, it's probably going to be the same, but this is going to be your order flow supply. So as you can see, we have supply, which we continue with this supply, and then we continue with this supply. So if we make connection with this, we then see some supplies made, then we have bearish order flow, but we need to make a continuation until there. Now what can we also see? Internally, we also do have some bullish order flow because we are respecting demand zones at all time. So there you could also expect for this order flow to hold, to trade up higher, to make connection with this order flow. From here you could either trade down lower or continue the order flow back up higher, but definitely expecting some order flow. So going over to the 4 hour here, what can we clearly see? Bullish order flow. Why? We have demand that is in control every single time and it's pushing price back up higher again and again and again. So what do we expect from this latest order flow? Well, of course, to push price back up higher in towards that higher time frame order flow. So now we've checked off every single thing, so we clearly know that we can look for higher prices. So then we need to take a look at our entry model, which is now going to be the magical 3 condition POI. So we need 3 conditions for this point of interest, and then we can just place our entry and we can just trade the trade. So what did I do here? Or what is a 3 condition POI? First of all, it's a point of interest, a supply and demand, right? So in this case, it's of course going to be a demand zone. Now, if we take a look at this demand, we can take a look at the first condition. It takes out liquidity under these lows. So that's the first condition, okay? So let's write this down. 3 condition POI. The first condition is takes out liquidity. The second one is breaks structure. So from this sell before the buy, you can see we push up higher in order to break the swing high, so we break structure. So that's going to be our second condition of the 3 condition POI. It breaks structure. Then we have a third condition, which is going to be that it leaves behind liquidity. So we took liquidity, we broke structure, so this is number 1, number 2, and then we leave behind some liquidity at the lows, right? In order to take those out and then trade up higher. So what is going to be number 3 here? Well, liquidity over here inside or above the supply zone. So over here I took this liquidity. Why? Because it was inside the demand zone and we were in discount prices. So this was the nice liquidity point which I expected to take out in order to move up higher. You could have taken this and this, but then again it's too risky because you could already move up higher from that first liquidity. So that's why I took this liquidity, but nonetheless it's a trick condition is that we took or that we leave behind some liquidity. So what can we see? Trick condition POI again, guys, takes liquidity, breaks structure and leaves behind liquidity, and then this trick condition POI is so strong. Okay, it is so strong that you do not have to wait for any fractal break or strong high or low to be created, but you can just enter off of this supply or demand and can just trade up higher. So what I did, I placed my entry on top of that liquidity, stop loss underneath the demand, trading back up higher in towards the premium prices on the higher time frame. So this was the trade. I hope you liked it. I hope you learned a lot. If you guys have any questions, make sure to comment it down below, and see you guys in the next one. Ciao.